Hello and welcome to this brand new series on the Money Mile. We've joined hands with Shift Alt Cap to bring you a very exciting series, Demystifying Angel Investing. Now, angel investing is the buzzword, but how do you really go about it? Over the next few weeks, we'll tell you how. Today, with me is Himanshu Verma, who's the co-founder at Shift Alt Cap. Thanks very much, Himanshu. Pleasure talking to you.
Thanks.
And you're saying in this world of disruption, there are a lot of good startup stories out there which could be contributing to this disruption and therefore are good to look at.
In the sense, there are, I mean, if you look at it, Google came out as disruptor, right? It was an industry which came out. So, Google was a startup, Facebook was a startup, Amazon was a startup, and they may not be looking like startup. But similarly, today you have all kind of startups coming out. I mean, if I pick up an area of healthcare, the way industry is shaping up, we are shaping around personal healthcare. We are not talking about generic medicines anymore, right? So this is the level of disruption we are talking. So, and these companies, these experiments are done only by startups. I mean, elephants are too large to dance. I mean, it is very hard for companies to change, right? Some will, I'm not debating that, but a lot of companies find very hard to change direction with this level of disruption. So, there are startups. Our job is to go find those startups out and look at them.
Himanshu, while angel investing seems to be picking up in a fairly big way, I would say, but again, compared to other countries, we may still be very, very small. What, according to you, holds back an angel investor? What is the psychological barriers that they're dealing with of going alone on their own and beginning to invest in small ideas, big ideas, but small companies? What are those issues which they grapple with?
So, as we started our journey, right, we thought, awesome idea, mathematically sound, why aren't we doing it, right? And then as you meet investors, you begin to realize there are some inherent psychological issues we deal with. The first one I pick up is something we call loss aversion. It's become a theory now, right? That we hate our losses more than we love our gains, right? And keep in mind, when you're reading newspapers, your thoughts are formed by what you read. So, this startup fell down, this startup lost its money, and that is how your perceptions are being formed. So, in that sense, you're so negatively influenced that you forget the point that there is disruption, you may not have a choice, and you begin to get influenced by these level of things, right? So that's loss aversion is a huge mental block, I think, which is there. The second one is, it's a what we call as lonely investor syndrome. Think about it, right? I mean, stock market itself, people find hard to understand, right? I mean, you don't know whether the stock is going up, you don't know whether the stock is going down, what factors drive it. This is a nascent business. You don't even understand the full ecosystem around it, what is affecting it, what are the drivers, what can kill it. So, for you to actually go ahead and invest, you will need to get out of your lonely investor syndrome and go with groups. That's the only way to happen, because 5 people sit around a startup, understand various perspectives, you will begin to understand what it means. Otherwise, it's very difficult to make a decision on your own, right? That being the second. The third one, I think, is mental accounting. That, I think, is something which works in our favor. So, the brain works something like this, right? You decide that I need to put this, in your normal budgets, right? In your daily life budget, you put some money for clothes, you put some money for education, you put some money for healthcare, blah, blah. The brain works that once you put the money on that, you will spend. So, what we tell our investors is that diversification in your asset class is needed. Now, let's get over all the humps of our psychological barriers, assign some money into this, and then your brain actually will take over. It will force you to, because you've done your mental math, you know there's a bucket which is there, it's empty, you will begin to fill in that. So, those are things. I think the other one, obviously, is the last one is a trust. I mean, think about it, right? There's one startup sitting somewhere and you don't know who these guys are, you don't know whether they're going to run away with your money, whether they are credible, you don't know all of that, right? So, in that sense, the whole concept of sitting around with people, meeting them, judging, talking to their customers is another way to get out of some of these mindset. But like I said, these are 4 issues we are dealing with, psychological. I think It's not that they're not solvable.
It's been a pleasure talking to you, Himanshu. Thank you very much.
Thanks.